Tax filing made easy with new online portal. Taxpayers will soon be able to file their returns for the recently concluded financial year through the official Income Tax Department website. It is mandatory to choose between the old and new tax regime while filing the online form, with specific exemptions and deductions available for individuals. The process can be somewhat complicated, and it is advisable to gather all relevant documents and take note of major tax provisions ahead of time. While selecting the right tax regime, individuals must consider their income, investments, and eligible deductions. Salaried individuals opting for the new tax regime will be exempted from paying taxes on income up to 7 rupees lakh for the recently concluded financial year. It offers simplified tax slabs with limited deductions. On the other hand, the old tax regime allows taxpayers to claim a greater number of deductions and exemptions such as Section 80C, Section 80D, housing rent allowance, and more. The standard deduction under this system remains unchanged at 50,000 rupees. Choosing the right tax regime. Key considerations when it comes to choosing the right tax regime. There is no obvious answer, it depends on individual circumstances. Here are some key points to consider. Salaried individuals opting for the new tax regime can claim a simplified tax slabs with limited deductions. The old tax regime offers a greater number of deductions and exemptions, but standard deduction remains unchanged at 50,000 rupees. Individuals opting for the new tax regime will be exempted from paying taxes on income up to 7 rupees lakh. The old tax regime allows taxpayers to claim a deduction up to 1.5 rupees lakh annually under Section 80C through various strategic investments. Tax saving strategies under the old tax regime. Individuals opting for the old tax regime can avail a deduction up to 1.5 rupees lakh annually under Section 80C through various strategic investments. Some of these investment avenues include PPF, Public Provident Fund, EPF, Employees Provident Fund, ELSS, Equity-Linked Savings Scheme, Tax-Saving Fixed Deposits. Sukanya Samriddhi Yojana Life Insurance Premiums. This offers taxpayers a way to save taxes via investments and reduce their taxable income. Deductions linked to home loan interest. Taxpayers can claim deductions for the interest paid on home loans or housing improvement loans. Here are some key points to consider. Section 24(b) of the Income Tax Act allows taxpayers to claim tax deductions for the interest that they pay towards home loans or housing improvement loans. It is applicable under both tax regimes, with taxpayers able to claim the entire interest for properties that have been let out. Only the old tax regime outlines an upper limit for deduction of interest paid, 2 rupees lakh, for self-occupied property. Exemptions for house rent and other allowances. Taxpayers can claim a partial exemption for house rent and other allowances if they are living in rented accommodations. Here are some key points to consider. Section 10(5) pertains to leave travel allowance exemptions. Section 10(10) outlines conditions under which exemptions can be claimed for gratuity income. Section 10(14) allows for exemption for food and internet allowances. Section 10(10)(a) pertains to leave encashment. Employees can submit rent receipts and other documents if the total rent exceeds 1 rupee lakh annually. Several other expenses incurred by employees in the line of duty are also eligible for tax exemptions. Deduction linked to health insurance. Taxpayers can claim a deduction up to 1 rupee lakh annually on the basis of premiums paid towards a health insurance plan or a health rider for a life insurance plan. Here are some key points to consider. Section 80D offers a deduction up to 1 rupee lakh annually on the basis of premiums paid towards a health insurance plan or a health rider for a life insurance plan. Taxpayers can claim 25,000 rupees for premiums paid towards health insurance for themselves or their spouse and children, with the amount going up to 50,000 rupees if it is a senior citizen. There is also a separate deduction of 25,000 rupees that can be claimed for parents, again updated to 50,000 rupees for senior citizens. A word of caution: while the new online portal is designed to make tax filing easier, it is essential to carefully review tax provisions and gather all relevant documents before filing your return. The tax regime you choose will have a significant impact on your taxable income and deductions, so it is crucial to take your time and consider your individual circumstances.